Hi everyone, so today we'll do a stock analysis on New Hope Group, ticker NHC.AX, and it's an Australian coal producer. Quick disclaimer, I'm not a financial advisor and I'm just doing my own little research. Up to you to make your own decision. So here's the summary of the video. So we'll start with the company profile, then the fundamental analysis, then the technical analysis, the price catalyst. So that for this video it would be coal because it's a coal producer, and for the conclusion we figure out whether it's an interesting place like company to invest in or not. So here is a brief description of the company. So New Hope Group is an Australian coal producer that has been founded in Ipswich in 1952. So Ipswich is in Queensland. So on top of their coal, they do actually have a port, a bit of oil and gas services, and then an agricultural operation. The parent company is New Hope Corporation Limited, that has been listed in the Australian Stock Exchange in 2003. So before we had a brief description of what the company did, and now we're gonna go a bit more detail in the assets. So the main two things that I want to add at first is that they have two mines, so Bengalla Mine and New Acland Mine, so coal mine, and one produce at the moment 8 million ton and the other one 1 million ton. So the important thing to add is that the second one is in stage 3, so if I understand it right, it just got into production and it could reach to 5 million ton in the next 12 to 15 years lifetime. So on top of that, they have like 80% ownership of Bengalla Mine and 100% ownership of New Acland Mine. The important thing to consider is the cost of production of Bengalla Mine, which is pretty much like 80% of what they mine, is at $68. So I would say that that's pretty low, to be honest, and I show you after the price of coal, and it's pretty much like quite low overall. So then there is the port. So they have a port in Queensland, and they pretty much handle the coal export facility, and it's in Brisbane. Then they have two agricultural company, like they pretty much are using the same land as the two mines. So Bengalla Agriculture for the Bengalla Mine, which is 1,100 hectares of land, and the Acland Pastoral Company, which is the New Acland Mine. So that's about it. Yeah, on top of that, they have a few little like oil and gas services. We get to it after. So here is a map on the left side that shows where all the assets are. So this is the map of the Australia and the east side, and the two mines are New Acland in here and Bengalla in here. So one is in Queensland and one in New South Wales. I think like the reason they might have more than 80% in New South Wales might be related to royalty tax. To be honest, from what I don't know too well about it, but what I've seen is that the Queensland royalty tax seems pretty high, especially above a certain price, compared with New South Wales, which seems to be more of a percentage thing and not depending on how expensive coal is. So that might explain why they haven't really developed in Queensland as much recently, and most of it is in New South Wales. Something to bear in mind. And then the second part is so they have like the Bridgeport Energy. So they have a few little oil and gas exploration and production in Otway Basin, Copper Basin, and Surat Basin. And at the end, their port is in here, Brisbane. so that's Brisbane, and then just to give you an idea, Sydney is here. In these slides we would like to show all the customers of New Hope. So where do they send their coal, where do they export it to? And the first client, which is a bit surprising, is actually Japan with 46%. Then we have Taiwan with 23% and China with 15%. Finally, the internal, that like domestic, is 9%. There are others that are way smaller in Asia and then in South America, Chile. As you can see, we on the news, everyone mentioned that most of the coal is going to China. Well, it might be true, I'm not sure, but at least for New Hope, it's not true. It's only 15%. But like Japan is 46%, which is pretty high in my opinion, and it could be a potential risk of like if Japan doesn't buy all New Hope coal, like that would make like a problem. That would create a problem, and that's something to consider. So this is a bit more detail on where's the revenue coming from. So it's mainly Japan with 830, then Taiwan with 380, then China with 165 and 100, and then finally Australia with 150 and 30. So as you can see, Japan is 46% of the revenue, which is still a bit huge, but it's improvement because in 2023 it was over 65%, and I would say it's better if they can reduce it to 20-30% only in Japan and improve other countries. That would make them more like stable. I will be quick for this one. So all I wanted to show is that like the main assets are the coal mines with 2.4 billion, so as you can see in there, and then after they have others. So I'm not sure what they mean by others, but just to show that it's mainly a coal producer and they have all the assets in coal, most of them. So now we're gonna move to fundamental analysis. So the market cap is 3.5 billion. The PE at the moment is around 7 and might be forward to 5.8, so reasonable, under 10. The price to book is slightly high for me for 1.38. I like under 1, but you know, like at these levels, to be honest, the company is really cheap, and enterprise value to EBITDA at 3.5 is always like really low. Then we look at a bit deeper in the fundamentals. So the return on asset equity is like over 13 and 18 in there, which is pretty good. Profit margin, operating margin sounds pretty good. And what I wanted to show was the fact that they are having nice net income for the 2024 compared to their market cap of 3.5 billion. 500 million net income looks pretty good. They have 800 million in cash and 360 million in debt, so I would say they are around 400 million in cash as well, which is another good thing. And then they produce on levered free cash flow of around 233 million. So yeah, it's I would say at the moment a cash machine. So we look later that it might depend on the coal price, but at the moment it's doing fairly well. That's about it. I mean, you can see that they're giving pretty nice dividend of 10%, and payout of 67%, which is pretty good again. So in here, what I want to say is that the assets have been rising a bit, not really a lot, but like from 2.7 to 3.5, which is very good. They've had like debt, but they've pretty much been cancelled by their cash, so their net debt is 0. Then after what I've seen is like the increase in the book value from 1.6 to 2.4. That is pretty good. And then the important fact is that they haven't really reduced their shares, total shares, so haven't diluted the stock, which is very important, because if they increase the book value and add a lot of shares which dilute, it will actually not improve, but in this case they did. So all I wanted to show in the income statement was the fact that the income is a bit all over the place, but it's normal with cyclical stocks. So like 475 million, before it was 1 billion, before that it was 980 million, and then in 2021 it was 80 million. So as you can see, it bounced a lot and depend a lot on the price that we will see later. So that's something to consider, is that when the price is low, obviously in terms of coal, then the company will have less revenues. Very logical. So in here, all I wanted to show is the fact that their dividend has increased over the past 3 years. So that's mainly because of the coal price has increased a lot, and the fact that they've been able to pay back all their debt. Because like when I looked at it first in 2020, 2021, the company had lots of debt. And then now over the past 3 years, they pay back their debt and give back a fairly significant dividend. So that is good news. So obviously it's going down at the moment because of coal price lowering. So we see in the next few slides. And now another thing that I wanted to mention is the transaction. So over the past year, the directors have been buying lots of share, and actually much higher than they are today, which were around like nearly 4.5 to $5-6. So it's too short. At the moment the price is around 4. So I would say this is a really good sign, and I think it give a major like help to make you think, okay, if insiders are buying, that's a good sign. So in these slides I wanted to show you guys the 20 top shareholders, and the major one I wanted to show you guys is Washington Soul Pattison and Company Limited. So one company is actually owning nearly 40% of New Hope, and this is a little I wouldn't say concerning, but I would say something to bear in mind. They could manipulate the price a lot or try to acquire the company entirely. At the moment they haven't done so, but anything is possible. The other ones are a little less concerning because they're mainly like banks, so I would say people that invest through banks. So now let's look at the technical analysis. So if you see, it's been all over the place a little bit, but the thing to notice is the fact that since 2021 it's been pushing pretty hard on the upside, and it's been going sideways slightly downhill at the moment. So it's at 4. It could technically go lower, or maybe even to 3 or less, but to be honest, at these prices the company looks fairly cheap. So I really don't know. I mean, like, price could literally go to 2, 3, who knows. But in my opinion, I just think like at this level they're still reasonably cheap company. So let's see, because like coal is hated at the moment. I know that everyone is into more like clean energy and stuff, which I'm not sure if I believe in that, but I would say that's one way to think about it. I still think you cannot ignore coal because it's really important at the moment to produce energy. It's not maybe polluting more, but at the same time it delivers and produce energy, and that's what we need. So a similar thing happened with the coal price. So as you can see in there, the coal price went like shooted really strong from the first wave of inflation, and then now we're seeing like a big cool down. I mean, like, it's been going down a lot since then, but it's still reasonably much higher than it was even in 2019. It's pretty much at the top nearly. And something that I wanted to add is I added a little square, like the rectangle in red, and that's actually the cost of New Hope. So if it doesn't go inside that red box, there will be break even, let's say, because like, I mean, when they get to $70, they probably would be struggling a little bit, but you know, above $70 it's like reasonable, they still make money. But obviously if it start reverse, at the moment it's not, it's going downhill, but if it start reverse and back to 200, 300, that would definitely increase a lot the earnings. So that's why the price of the stock is not actually going up and still going down as well. So as a conclusion, I would say that the company seems very interesting. The insider buying over the past year or two is really exciting me a bit, because it's always a good thing when directors are actually buying more of the stock, and they've been buying quite big amount too. The cost of production fairly low of 86, and the company fairly stable. They haven't taken too many risks. They've been pretty stable on what they've done, and I like that part. So, and the last bit is like they are not trying to do any crazy projects or try something completely different. They're just focusing on returning dividend to shareholder, and I really appreciate that. The risk is mainly on coal prices, to be honest. Like, if the coal prices continue to go down and 70 or 60, it's definitely going to affect the stock price. But bear in mind that when the company was at $1 or $2, there were lots of debt, versus now the company doesn't have any debt. So I really would be surprised if it was to come back at those price. But if it did, to me it would sound even cheaper than when it was in 2020, in my opinion. So that's what I see. But honestly, you have to wait for coal to reverse to feel safe, and anyone that is buying now is pretty much picking the bottom, as I would say. Picking the bottom is always risky, could always go lower, but it's definitely, in my opinion, value stock. And so the risk is that they report as well poor results in 2025, considering the coal price that we have at the moment. And but then hopefully, if coal price stay above $100, we might expect a continuation of fairly reasonable earnings. That's it for today. So I hope you enjoyed the video, and see you in the next video.